Hello, and welcome to this week's Marketing, Branding and Getting the Sales Show. And today we're actually taking a different tack. We're talking about funding, specifically funding for business growth when you are a small business owner. And we have a special guest with us today to help us talk about that, who has more expertise in this matter. So if you're watching live, put hashtag live in the comments, as well as any questions that you have around funding for business growth. Or any, please share your stories of your experiences, good and bad. And we'll just do some intros and then we'll dive into today's topic. So I'm joined today by our usual co-host, Jessica. So Jess, if you want to do a quick introduction, please.
Hi, good morning. And for those of you that don't know me, what I do is I work with my clients so they can overtake the competition, increase that emotional connection, between the new and existing customers. I do that through taking them through my 6-step brand loyalty process, which is a tested and proven process to get you the good results that you want. If you're interested in knowing what them steps are and how maybe it can impact your business, then please drop me a message. I've got a short video that I'm more than happy to send to you and you can have a look through there. So that's me, Jess.
Fabulous. Thank you, Jess. And David, if you'd like to introduce yourself, please.
Yeah, thank you very much, Una. So I'm David Quigg from Business Finance House. We are a relationship-led finance brokerage based in Chester, and we work with businesses to help them not just on a one-off basis, but over a long period of time to grow their business and to buy the assets or to acquire the funding to help their business grow.
Brilliant. Thank you, David. And if you don't know me, my name's Una Doyle. I'm a business strategist and coach, and I can help any business to uncover at least 50k in hidden revenues without spending a penny on marketing and advertising in only 50 minutes. If you want to know more about that, then ask me for either in the comments or in a message, ask me for my video, which is about 5 steps to double your profits. And that shows you exactly how I can do that. And just in time, let me bring him back up. And just in time for the last of the introductions, we're joined by Stephen, our usual co-host as well here on a weekly basis. Stephen, would you like to just quickly introduce yourself?
Good morning. Sorry, can you hear me?
Yes, we can hear you.
Sorry, having communication problems. Very sorry. Good morning, everybody. My name's Stephen Lerman from Chameleon BDS, Outsourced Business Development Service. I help companies that don't have the time, resource, or don't like making cold calls or appointments. I do all that for them, and I generate new business for them. Thank you very much.
Fantastic. Thank you, Stephen. Well, I think now it's time to kind of put the spotlight onto David. And to just, what I'd love to understand, first of all, is like a lot of the businesses that I work with, they're very reluctant, or it doesn't even occur to them that they could get funding to help their growth. So what do you think it is about people's mindsets and funding that kind of can, cause this to happen?
I think people who, you have so many hats on when you're a business owner, and that takes up a lot of your time. And usually their port of call is to go, well, I've got a relationship with the bank. Your assumption will be that if you go to your bank, they know you. They should know the most about your business and give you the product you need. But that's not always the case. So people will go to their usually high street bank, get a no, and then think, well, that's the end of that. I can't get funding. I've got no chance. And that's that's kind of the end of their journey. Whereas there is a number of specialist funders, even a lot of the high street banks, they have specialist products. And if you're in a certain sector, they're more likely to help you out than if you're in a different sector. So it's all about, that's where a finance broker comes into their own, of having that knowledge of which funder will assist what business type and be able to help each business.
And I guess a question that might occur to, small business owners is, does it cost more money to use a broker than to go through the banks, or how does that kind of all work?
On the most part, I can only speak for us at Business Finance House. We don't charge. There is an option to charge an administration fee, but we don't do that because we want to build a relationship. We don't want to have that one-off transaction. We work with the funders and we're paid by the funders.
Right.
So I could say I can't speak for every finance brokerage, but for us, there is no. It's exactly the same. If you were to go directly to the funder, you'd get the same cost as you would from us. The only difference being is we might be able to source when I say more appropriate, a cheaper funder for you.
And I guess it's not just about the cheapness, though. Obviously, that's important, to make things as cost effective as possible. I imagine there might be other terms that would make certain deals more favorable or appropriate in different situations.
Yeah, personal guarantees are a big one at the moment. We've got the government-backed recovery loan scheme, and that on that you can get up to £250,000 without personal guarantees. So a lot of people are trying to use that to avoid signing personal guarantees, and even taking existing finance and consolidating it or refinancing it so that they remove their personal guarantees from their existing finance. So that's a real big one at the moment. And the other one is time. You'll find that the cheaper the funder, the more information and the longer it takes. Whereas sometimes people have an opportunity and they want to get the money as soon as possible. So it doesn't mean you go to the most expensive option, but you might have an option that's a little bit more expensive, but you get the results quicker. And we make the customer aware of that. We say we can get this, but it'll be 2 weeks or a week, or we can get this and they'll have a response in a day or two.
Right, gotcha. Okay, interesting. Just for people who might not understand, could you explain what a personal guarantee is, please, David?
So a personal guarantee is if you have a limited entity, like a limited company, you are separate from the business. So if Una Doyle Limited was to take out a loan without a personal guarantee and anything was to happen to that, that's all based on Una Doyle Limited. They have no recourse on the directors of that business. Whereas if there's personal guarantees, there's a little bit more responsibility. But with a lot of funding being shorter term, usually on unsecured loans, the longest is 5 years, and that's only for certain products. With a lot of them, the funders see it as a way of the directors giving their kind of stamp of approval on it. If they're just looking at kind of a 6 or a 12-month facility, it means that the directors know that the business is in a good place, and the likelihood is the business is still going to be trading in that time. And that's how the funders see it on those short-term facilities.
Okay, and so even if you got a limited company and you get finance with a personal guarantee, then they could come after your house and other assets. Or is that how it works? Or
there's more of a legal process than that, and I don't want to get there's that'd be in question for an insolvency person rather than a finance person. But yes, it means there's more recourse. It means that the funder has, if it's just in the limited company, then it's just the limited company. Whereas if there's personal guarantees signed, it means that they can come and ask you for the money personally.
Okay, great. So what would be some tips that you would like to give in terms of when people are looking for funding? What kind of tips would you be able to give to help them in terms of what should they be thinking about, or what way should they be going about it?
A lot of funders, they like a customer that they know. So it might be a question of, don't go to a funder straight away and go, oh, I need half, 3/4 of my turnover on a 5-year facility, because they don't know your business. They don't know enough about you. There's shorter term facilities and things that you can build up credit lines in order to open more doors for you in the future. So little things like spreading the cost of your VAT over 3 months. If you're taking finance facilities out like that, the funders increase their appetite because they see that you're a good, assuming you make your repayments. If you don't make your repayments, then those doors soon close. But it opens up avenues for businesses, because they will look at it and go, oh, they've been funding their VAT with X or Y, and that means that they've built up a repayment history. They know how to service the finance that they have. Whereas a lot of people just come in and go, oh, I need this massive sum of money to the size of their business over a really long period. and that's where it becomes difficult when people are looking for massive sums over terms longer than they've currently been trading.
That's interesting, because I know on a personal finance point of view, I've heard that advice of use your credit card, but then pay it off to just build up that, I guess, that record of paying off finance. Yeah.
Yeah,
Okay.
it is. It's very similar.
Yeah. So, Jess, Stephen, have you got any questions or thoughts on what David has shared so far?
I've got a question, David, if you don't mind. So how easy or how difficult is it for new businesses to get finance? Or are there any specific requirements they need, any specific guarantees, or do they have to wait a certain amount of time?
So with all funding, the higher the risk, the higher the cost. So for newer businesses, the cost is unfortunately more. For new start businesses at the moment in this kind of hopefully post-COVID economy that we're in, it is really difficult to get funding as a new start business unless there is security on offer or there is a director with a good amount of equity, which isn't always that they want to put the security there. The equity means statistically you are a much lower risk. It's just when they've looked back at figures in the past, they can see that bad debt comes from non-homeowners. So if you've got a home, it doesn't mean you have to put your home on the line, but it might mean that you have a personal guarantee signed, and it's it's like we said before with the personal credit cards, is you've got that bit of repayment history because you've probably more than likely had mortgages and other bills to pay for, and it just shows that you've got a little bit more kind of a little bit more about you. Is that my assumption on it? If we're looking at equipment, asset finance, then it's a little bit easier because you've got the security of the asset. So from the funder's point of view, they'd be thinking, if this business fails, then we've got the equipment to sell. So there's a little bit more security there. But on an unsecured loan at the moment, it is difficult for new start businesses.
Okay, thank you.
But sorry, there is things that business plans, cash flow forecasts, having management accounts, assuming that there's been some trading rather than it being a kind of pre-start. All those things, as much information as you can provide, help the application because it gives them more information and more to kind of hang their hat on as to make a decision.
Thanks.
I have a few questions as well, and one of them follows on quite nicely from that one. A lot of people might think that funding is just for startups. I've just started out, I need some funding to get going. What would you say to them people that have been in business a few years and maybe need a little leg up? Is funding available for them? Where do they go? What tips have you got for them sort of businesses?
Absolutely. If you've got trading history and you can show management accounts, if you've got a plan to growth, you're 2 steps up the ladder than the new start business. So there's more available to you, and it then depends on what type of finance product that you want. Is it an invoice finance route in order to get money in sooner to expand the business? Is it a fixed term loan that you're looking for, or maybe some sort of commercial mortgage to buy the premises you're in order to grow like that? So as a business that's got a trading history, there's many options and many things that you can provide, that we can provide finance for, and it might be something short term that just enables the business to grow. An example of that being I work with a vet practice, and they fund their VAT not every single quarter. They just do a 3-month VAT facility, but they do it when they've got lots of consumables and lots of things to pay out for. So the money they've got set aside for the VAT, the funder pays the VAT, and they use that money to buy things in bulk and get a discount on it. So that's them putting that finance to use and it working really well for them.
That's a great example, because as well, my next question was going to be, what sort of examples is there where people can get funding for? Because again, businesses might think, okay, I've got this challenge, I've got this struggle, but I didn't know that I could get funding for that. So that was a great example. Have you got any other examples that are maybe different to that and show the variety?
Yeah, one of the ones we've had recently it was actually my colleague Matt who's transacting this. Is we've seen a lot of people who've taken government-backed funding in 2020 or early 21 over a shorter period, and they've been able to get access to loans that are much bigger than they would usually get, and thinking, oh, we haven't got to pay for 12 months. And then in 12 months' time, when the repayments have started, they've gone, wow, this is painful, this one. And we've really struggled to refinance those and take them and put them over a longer period, because it's all based on government eligibility and people have used it up. But now we're seeing those facilities are starting to be available, and it's something that we've been able to take. Those people have had maybe 2 years or 3 years repayments, and now we're able to do them over 5 or 6 years, and it's not costing them a great deal more, but it just really helps their cash flow, not having those big chunky repayments that at the time during COVID you took it because we didn't know where we'd be.
Right. Interesting. What about, like, do you have examples where, like, I work with a lot of service-based companies, and often one of the sticking points is like this transition where they're, that we're putting things in place, and they're, they're moving on, and they're in a much better position than they were, but they really want to hire, but they just maybe don't quite have the cash flow yet to be able to do that. So what kind of finance would you recommend in that situation? And like, because I think a lot of the time people think, well, I just can't do it.
Yeah.
So what would need to be in place for them to be able to do that? Or
so what's available now until June is the government-backed recovery loan scheme that I mentioned earlier. Now that is up to it includes the any other government-backed funding that you've taken, but you can take up to 25% of your turnover, and that pot of money that the government's put there that they've backed is for growth. They're the types of purposes that they want people to use that money for. That you are, I mean, the government are shouting out for people to employ people. So if we went for an application and that was the purpose, I'm sure it would be looked at favourably. But that's there. Outside of that pot of money, there is always fixed term loans. There's always facilities that we can look at and see if we can provide funding to assist with that, to take that on. And with a lot of the funders, we don't have to itemize. It's this much is for this purpose and this much is for this purpose. If we just give them a general overview and let them know what the money's for and how it's going to help the business grow, then that should be sufficient. That's what the fixed term, fixed amount loan is the kind of the number one solution there that we when people are looking to grow and to recruit.
there's a minimum of 25 grand with that. Is that the right one?
There is different funders have different criteria on that. But outside of that, there is still options. So I'm looking for a firm at the moment, and they have their 2019 turnover that it's all based on wasn't very good. Their 2020 was even worse because they're a building company and they weren't really open. But their 2021 is quite good, and they're in the same situation and they're looking at growing. Because of their turnover in 2019, they're not eligible for a recovery loan scheme. But we've been able to go to we've got 3 or 4 different options, and we've gone to the most appropriate one first, and we're just waiting for them to come back to us. But they are in exactly that situation. Is they've had a really good 21 and are looking to expand, looking to take some more people on, looking to maybe buy a premises rather than rent one. And we've been able to source that through we'll hopefully be able to source that through a fixed term loan for them.
Okay, great. So what are some of the mistakes that people make when it comes to funding their growth, David?
Trying to hide things.
Okay.
We ask if you've got payment issues or you've had things in the past, the best form of defense is attack. Be upfront and honest and tell them, I went through a divorce, or this happened, or this is the reason why that's there. And you can explain it and tell them that is by far the best. And we still might be able to get the funding that we need, but that massively helps, because if the funder's looking through an application and they see something like that, it's a red flag straight away, because they'll know that the customer will know about it, and they've just not, or they'll think either us as the finance broker have not disclosed it, or the customer hasn't disclosed it. But honesty is the best policy, because the checks the funders do and the process is ironclad. So they will, if you've got, we've had it before where we've asked, is there any issues, and the person was in an IVA, and you go, no, nothing, and then you send across the funder, and they come back pretty much straight away and go, no, this is not going to wash with us, unfortunately.
Yeah. And for anyone who doesn't know, an IVA, I think it's an insolvency voluntary agreement.
Yeah, it's a voluntary arrangement. So he's had issues in the past, and he's with all the people he owes money to. He's come to it's an individual voluntary arrangement.
Individual, right?
Yeah. So that's something that unfortunately is a no. We can't. There is options with security to be able to kind of pay that off and move on from it, but usually it's you have to wait until things like that finish. So that's the first one is be honest with your application. If you've had a downturn in business for some reason, then tell them. The underwriters, they will look at it and go, you've had a bit of poor trading in the latter end of the year, but you've done this or you've done that in order to counter it, and they'll see that as a positive, as you've seen a situation and you've dealt with it.
So it can be more how you've dealt with the situations rather than the situations themselves. Yeah,
because they will, we joke and say underwriters are glass half empty. They will always see that, it's easy to look at an application and go, that should be approved, but it's easy for me to say it's not my money. It's not my money that's being someone. It's like, there's someone in the pub asking to borrow money and turning around to your friend and going, go on, just lend them some money. It's fine. It's easy for you to say when it's not your money, but for an underwriter, you want to help them to see a positive image. You want to give them the information. So if there is, for example, as mentioned before, payment issues in the past, we'll tell them what the situation was and why that happened, and they'll see around it. Because if it was something that was, I had a customer that she's a solicitor, and she had a heart attack and didn't work for 6 months, and that's something that whenever it comes up, it's easy to get past. It's easy to move on from, because that's been dealt with, and that's it's not from her being aloof or a bad business person. It's a situation that happened and has been dealt with.
David, quick question for you. Sorry, so if, let's say, there have been issues in the past, would they still be able to get finance, but just may not have as preferable rates as first thought, or is it just a straightforward no?
Yes. It's not a no. There is still options there, and that's again where a finance broker comes into their own, and they can help talk to you about the situation, find out what it is, and go, unfortunately, it's not one for now. Maybe we can speak again in 6 months, or this. A lot of the time we can go, if there is an option, it'll be 12 months, and this will be the cost, and there's no cost to our service for that. If we come back to you with an acceptance and it's more expensive than we said, or you just feel it's not right for your business, that's fine. You have the right to walk away until you sign the paperwork and you get the money. That's when you're in a different situation, but it's no charge until it's in your shopping trolley, I suppose, rather than just once you get to the till, you sign the documents there. That's where you've got something that you need to start paying for. But yeah, there is options there, but everything is, we say it's rate for risk. So the higher the risk, the higher the costs will be.
Gotcha.
And so going back to when you mentioned tips, the information, having information there that's ready, having management accounts, whether it's a report you can run off from your Xero or Sage or whatever kind of bookkeeping software you use, because usually your filed accounts will be at a minimum 9 months out of date. So you just want to give them as much information as possible, because you'd like to think that your trading has been, since your year end, your trading has been better. Then try and have the information to show that. Try and have the information to help the underwriter make a positive decision.
And of course, if your accounts aren't up to date, that's probably another red flag if someone isn't actually monitoring how much money is going in and out of the business.
Well, usually we ask for management accounts and people go, "Oh, don't keep them." And you kind of think, well, how do you know? And they will have, a spreadsheet or something that they will have themselves that they keep, but they just don't, because they don't use a bookkeeping software. They don't see them as management accounts, and that's absolutely fine. If someone's just got, a spreadsheet that shows we've took this today and we spent this week, and that's how they manage their business, then that's fine. Send that across with an application, because the underwriters will understand it. They'll be able to see what information's there, and it shows that you've got your business head on and you're looking at it and you know what's going on. That is a worry of an underwriter when people don't have management accounts or they don't know what's going on within their own business.
Exactly. And I think for a lot of small businesses when they start out, and actually not even when they start out, I mean, I've talked to some businesses that have been going a long time and they're not looking at the numbers on a regular basis. And I think they often think, oh, well, that's for tax. And it's like, no. It's like, as a business owner, you have got to know what's going on in your business, because, I mean, that's often one of the areas where I'll find, where I'll be able to find a lot of money for businesses, either in terms of of cutting costs or looking at, well, what's really working. And, the numbers are, a great place to look for that. So, yeah, people really do need to be doing that.
Yeah, you're really right. And even for larger companies, I've seen the management accounts of big law firms, and there's areas of law that they're working in and they're not making any money doing that. And you kind of look at it and you go, someone in their accounts department is putting these together, but no one's looking at them. No one's looked at it and gone, oh, we shouldn't be doing, I can't remember, I'm going to make it up here, but we shouldn't be doing personal injury work because it's actually not making any money for us. We should be focusing on conveyancing or focusing on this part of the business. And I think that rings true for a lot of businesses, is those management accounts. You can look at them and go, this is what we should be doing. We should be, we should.
And I think that's challenging to do from a spreadsheet, to be fair. I think that's where, paying for the Xero or FreshBooks or QuickBooks or whatever thing that allows you then to look at different types of things that you're selling. And also just to kind of be looking at a monthly profit and loss account, so you can, really keep an eye on, well, like, what percentage are my overheads? What percentage is my cost of sales? And make sure that they're, that you're looking to improve those things all the time.
And something that, and I'm sure you'll be pleased for me to say this, Una, is to have someone who's not in the business, to have a look at them, to have a business coach, to have someone who's able to not have their kind of on, they're not in the trenches of the business, to be able to look at it from a bit of a higher view and go, actually, take the emotion out, and you shouldn't be doing this or you shouldn't be doing that. And that is something that having someone external to the business come in and help is it can be massive to point them in the right direction.
Thank you. Yeah, I agree. And so sometimes that could be an accountant, but a lot of the time it isn't, because a lot of accountants are transactional and they're not necessarily looking at those things as well. So, it's You've got to look at who you can be speaking to about these things.
Yeah, an accountant will offer you advice and offer you. We will say, when people ask us, should I take a lease or a hire purchase on equipment, and we'll go, it's a tax question, really.
Yeah,
Talk to
exactly.
talk to your accountant. They will advise, but they won't necessarily help you to grow the business and help you to take those next steps. And that's where.
And actually, is that piece of equipment the right one to be getting? So I guess it's like, often when I'm talking to marketing people, it's like, well, look, let's get the business strategy right first, then look at marketing strategy, then look at marketing tactics. And I guess it's the same thing with funding. You want to get your business strategy clear, and then you can look to see, okay, well, in that case, we do need this funding, or we don't need this funding, or actually we need a different kind of funding than we thought we did. So I think that's something that's interesting as well. Question for you: do you have to be a limited company in order to work with somebody like yourself, David?
No, not at all. We deal with any business type. I mentioned law firms before. A lot of law firms are small partnerships or sole traders. So we have a number of facilities for them. The process might be a little bit different. No more or less tricky. Just different. There's just different steps and different bits of information that we'll need. The main difference being is, if you are a sole trader, then you won't sign a personal guarantee, because you and the business are in effect one. You are the business.
Right. Yeah. Okay, cool. Good stuff. I do have one more question for you, but Jess, Stephen, any other questions or thoughts on what David's been saying?
No, it's all very comprehensive, and it does make a lot of sense. And there's some of the things I didn't know, so I appreciate the feedback. It's good to know for future reference.
No, good.
Yeah, completely agree with Stephen as well. A question that I was hoping to ask you was, what maybe kind of resources do you recommend? Because I know Una's recommended some great stuff to me. Profit First is a good book for anyone that hasn't listened to that. You're a badass at making money. I've tackled with a lot of money mindset over the past few years. And resources like that have really helped me, especially that badass book. So if anyone is struggling with a bit of money mindset, listen to that book. She's absolutely hilarious. But what other kind of books, resources, or you as a company, do you offer any resources? Where can people go just to get that little bit more information?
It's a good question, really. We don't, as a company, offer anything at the moment, but it is something that we're kind of considering a rebrand and things like that. I know that you may have seen the adverts for Barclays, I believe it is, although it might be another bank now that I think about it, where they have some online resources. For me personally, I like listening to a lot of stuff for me as an individual. So there's a book called Sumo, which is called stands for Shut Up, Move On, by an author called Paul McGee, and it talks about looking at things from other people's perspectives and how to react to situations. And I find that those things that help me personally help me on a business perspective as well. So I don't think I read a lot of business kind of strategy books and business help books, although maybe I should. I'll take your I'll take your advice on board, Jess, and get them read.
Did you say that was Paul McGee?
Paul McGee, yeah.
Yeah, I've just found it because I'm interested in looking at myself, so I'll put it in the comments too for everyone to access that as well.
Funnily enough, I met him years ago. I attended a talk he did when he had just launched that book, actually.
Yeah, there's a great analogy about a beach ball, and I used to, before we moved offices in December, but before we moved, I used to have a picture of the beach ball on the desk, because you'd always be trying to second guess someone else's decision and why they've done that, and actually you've got to put yourself in their shoes and kind of see it from their perspective.
It's good having those little triggers to remind us of lessons that we've learned.
Yeah.
Exactly. Fantastic. So I did have one other thing that I'd love you to share as well, because I know we've talked about that is not just about people can get your help, not just in terms of getting funding for their own growth, but also in terms of helping their clients to get funding to pay for their services. So
Yeah.
you want to talk a little bit about that, because I mean, that's something that might be helpful for you, Jess, actually, as well.
Yeah, absolutely. So the probably the most well known is if you sell equipment, if you have if you're a provider of printers. I really struggle to think of any sort of equipment. Then I was looking around the empty room, going, "There's nothing in here." Then you could sell them at £15,000 a time. But how many businesses have £15,000 sitting there? How many more sales could you generate if you can give them a kind of a 3-year payment option? You'll probably find you'll generate a lot more. There is options for if you're a service led and you have larger costs, that you can offer that to your clients, but without the security of the asset, it is a little bit more tricky, and it just depends on the strength of the customer, or the kind of the volume of business that you're able to do. And then the other one is Invoice Finance. That can help you take on. We've seen a lot recently where people are getting large. We've seen one that was a large NHS contract, and the company were looking at it going, "We actually haven't got the money in order to service this contract," and we were able to finance those individual contracts, so they got that money up front, meaning that they were able to buy the stock and do what they needed in order to complete that transaction without having a usually it's an invoice finance facility is all encompassing. It takes, you end up putting every single thing through it, but they were able to finance those individual invoices, but also find out the costs before. So they were able to go back. So, the contract might have been for £30,000, and they were able to turn around and go, if you pay on day one, it's £30,000. If you pay on day 30, it's £34,000. If you pay on day 60, it's £37,000. So there's an incentive then to the end user to pay sooner. But it just means they get that money up front. The customer gets the money up front, and it's better in their bank, enabling their business to grow.
Absolutely. Yeah. And I think, sometimes when I'm talking with service-based clients about raising their prices, because often they're undercharging a lot. And also, in addition to that, then we're also looking at putting together packages that are a higher value. So it's not about just kind of hiking up prices. It's about, well, actually, what is this worth? If you're really, honing in and solving a real problem for people, what is that worth to this particular sector of the market, and just really honing in on that. And I think the ability to be able to say to those customers, well, actually, you can spread the cost, and rather than the person bearing that. I think there's something actually as well about, when you've got a small business that's service led, and so say they were, they had a 10K package, for instance, and that, they were kind of doing that over a year or 10 months. And I think if they did that through a company like yours, then I think the customer is going to pay that 10K. But sometimes people get to month 8 or 9 and something happens or whatever reason, and then they can start thinking, they feel more like, oh, well, I've done most of it. I'm just not going to pay. I'm just going to stop now and not going to pay the rest or something. So
yeah,
I think there's something about having that third party in the finance that they take it more seriously.
Yeah, I think you once you've signed a finance agreement and you've taken those steps, you feel like you're more liable for it. You're more, no kind of disrespect to anyone, but if you did a payment plan with the customer, they're just going to go, well, you're just a small SME. You're not going to, what can you do? And if you've got the time and effort to put this in, whereas funders will have letters to
Teams of
send
people.
and teams of people to, because a lot of the time it's, payments are missed because it's just unfortunately one of those things that managing cash flow and things like that. But they will, that's another tip is if you get yourself into one of those situations is just speak to people. There are people at the end on the end of the phone, and if you help them, they'll help you back.
Yeah, absolutely. And of course, the other benefit to the service-based business owner is they're getting that money up front, and then they can use that money to help fund their growth. So maybe they do need to hire somebody, or they want to outsource some sort of done-for-you marketing, or they need to upgrade their own equipment or whatever it might be, or invest in a software, or invest in a business coach or a branding person, or want to outsource their calls or whatever it might be. And so we can fund that, can't it?
If it was the other way around and we were dealing with the business and they come to us and said, we need X amount of money to grow our business, we're thinking about doing this or looking at this purpose, then we'd have a serious conversation about helping them. So absolutely, it can work the other way around. Whereas if you're the service provider and you've got people inquiring to you, then we can see if we can offer the finance product to them as well.
Yeah, absolutely. Okay, fantastic. Any final tips or advice that you would share, David?
I just say if you've got plans, if you're thinking of if you're thinking you might need finance in the future, is open those credit lines, make sure you've got the information, and be honest with your application. Use the power of a broker who can make sure that you are looking at the right funder and that you're getting the right costs. And that we talk about that for everything. We talk about if someone uses Invoice Finance, for example, we turn around and go, well, that should make your business grow. So in theory, if you've been using it for 12 months, you should be able to get a cheaper cost and a better rate, because your business should be in a stronger position than it was 12 months ago. So maybe it's time to move on from that provider and to get a kind of what we call a higher tier provider, or just ask the one you're with to sharpen their pencil a bit. But just make sure you have the information and that you're looking at it and you're making the right decision and that you're taking the right finance option.
Fantastic. So if you've got any questions, get in touch with David and ask him. I'm sure you'll be able to help them out. So great. Thank you so much, David. I think that's been really helpful. I think it's good for people to look at different aspects of their business. I think it's so easy to get stuck into kind of, you're going on, you get on that hamster wheel, and people are so busy, servicing their clients, being in their business, and just to have that opportunity to be able to find out more about, different ways of financing their growth. So you got the invoice financing, you've got helping your clients to be able to pay you, you've got the government-backed loans, as well as being able to other kind of finance facilities that you have. So do please reach out to David or any of us if you want more information on the different ways that we can help your business to grow. So thank you very much. We will be back here at the same time next week, and we'll look forward to seeing you then. Bye for now.